Silver's trajectory through 2025 has been nothing short of extraordinary, transforming from a metal often overshadowed by gold and industrial-based metals into a focal point of global commodity markets as the year draws to a close. As of today, the metal has reached price levels that would have seemed almost unimaginable just a few years ago, with spot prices surpassing historic thresholds and local market prices climbing to unprecedented highs. In India's futures, market silver recently surged past R2.42, lakh per kilogram, representing a dramatic rise that reflects not only international pricing pressures, but also domestic demand dynamics and currency influences that have shaped local valuations over the last 12 months. This surge has been underpinned by a confluence of both macroeconomic and structural supply and demand factors. In global markets, silver has reached levels above $76 per troy ounce, a symbol of just how dramatically investor and industrial interest has intersected to push this metal into price territory typically reserved for far rarer commodities. In a remarkable twist, silver now commands a price per ounce higher than that of a barrel of crude oil, a rare inversion that highlights both the strength in precious metals and the relative weakness in energy markets as supplies remain abundant and demand is softened. Unlike gold, which is primarily driven by safe haven flows and central bank demand, silver's price performance in recent months has been heavily influenced by its unique dual identity as both a precious metal and a critical industrial input. This dual role means that silver's fortunes are tied not just to investor sentiment and macroeconomic uncertainty, but to the rhythms of global industrial activity, energy transitions, and technological innovation. These forces have collectively reshaped the silver market in ways that have surpassed traditional expectations for a metal once relegated to jewelry and coin demand. At the heart of this narrative is industrial demand, which now consumes a majority share of global silver production. Sectors such as solar photovoltaic manufacturing, electric vehicles, data center infrastructure, and advanced electronics have all contributed to a sustained and rapid increase in consumption. Silver's unparalleled electrical and thermal conductivity make it indispensable in applications ranging from photovoltaic cells that convert sunlight into electricity to the intricate electrical contacts required in EV battery management systems and high-performance computing hardware. This demand has not only grown in absolute terms, but has also broadened silver's role in modern technology systems, embedding it deeper into the infrastructure of the global economy than ever before. Solar power remains one of the most significant drivers of demand. As countries pursue aggressive renewable energy targets and decarbonization commitments, the installation of solar panels has accelerated at a pace that requires enormous quantities of silver paste to manufacture photovoltaic cells. Though technological advancements have slightly reduced silver content per panel over the years, the sheer volume of installations continues to tilt the demand equation heavily towards silver. Each gigawatt of new solar capacity demands substantial amounts of silver, and with global solar capacity projected to expand dramatically in the coming decade, this trend is unlikely to abate. Electric vehicles are another powerhouse of silver demand growth. Unlike traditional internal combustion engine vehicles, EVs incorporate significantly more silver due to the increased number of electrical connections, power electronics, and wiring systems required to manage battery operations and regenerative braking systems. Estimates suggest that EVs consume considerably more silver per unit than their conventional counterparts, and as EV sales have surged globally, driven by both consumer preferences and regulatory mandates, automotive silver demand has emerged as a core pillar of the metal SS industrial profile. Adding further complexity to the demand picture, next-generation technologies such as artificial intelligence infrastructure and telecommunications networks consume silver for reliable, high-performance components. As data centers proliferate to support the exponential growth of digital services and cloud-based computation, the metal's role in server hardware and connectivity systems has only expanded. Similarly, the deployment of 5G networks and the eventual transition to even more advanced wireless infrastructure demand silver in connectors, antennas, and other high-conductivity components, tying the metal's future to some of the most transformative technological trends of the 21st century. Despite this explosive growth in demand, silver supply has struggled to keep pace, creating a structural imbalance that has persisted year after year. The global silver market has been in deficit for multiple consecutive years, meaning that annual demand has consistently outstripped the combination of mine production and recycled silver. Much of the world's silver is produced as a byproduct of mining other metals like copper, lead, and zinc, which limits the ability of silver output to respond quickly to price signals or surging demand. As a result, the market has experienced chronic supply tightness, and inventories, particularly those held in exchange or dealer channels, have declined markedly, with delivery times extending and premiums for physical metal widening as buyers compete for limited stock. Adding to these supply constraints, recent policy developments are poised to tighten the market even further. In a significant shift that will take effect in the coming year, China has introduced new export licensing requirements for silver. Because China accounts for a large share of global silver production and processing, this regulatory change is expected to reduce export volumes as only large, government-approved firms will qualify to export the metal. This has immediate implications for global supply, potentially exacerbating shortages at exactly the moment when industrial demand shows no signs of slowing. This tightening of global supply channels reflects broader geopolitical and economic recalibrations that are increasingly influencing commodity markets worldwide. These supply pressures have manifested in local market behavior as well. In key Indian bullion hubs like Jaipur and Ahmedabad, traders are adapting to sharply higher prices and shifting consumer patterns. In Jaipur, silver's steep rise has dampened demand for traditional, heavy jewelry items such as anklets and kedas, with buyers now gravitating toward lighter, design-focused pieces that emphasize artistry over sheer metal content. Manufacturers have responded by innovating with alternative designs and styles to maintain demand even as underlying silver costs remain elevated. This evolution in consumer behavior reflects the ripple effects of global price movements on domestic markets, where cultural practices and economic realities intersect in complex ways. In Ahmedabad, precious metal prices have reached unprecedented levels, prompting temporary halts in business-to-business trading due to extreme price volatility and supply uncertainty. Silver prices there surged by significant margins in single trading sessions, underscoring just how quickly market conditions can shift when global and local dynamics converge in times of heightened demand and constrained supply. The rapid price moves have unsettled some market participants, leading to caution even as overall sentiment remains bullish among many investors and industrial buyers. The macroeconomic backdrop has also played a crucial role. Expectations of interest rate cuts by major central banks, including the U.S. Federal Reserve, have reduced the opportunity cost of holding non-yielding assets like silver. Lower interest rates typically make precious metals more attractive because they reduce the appeal of yield-producing assets, especially in environments where inflation concerns persist. Investors seeking hedges against currency debasement and economic uncertainty have increasingly shifted capital into tangible assets, including silver, contributing additional upward pressure on prices. International Precious Metals Institute. The interaction between industrial demand and investor flows has created a feedback loop that amplifies price movements. As silver prices rise, physical inventory holders and exchange-traded products, backed by silver report strong inflows, further tightening physical markets and reinforcing price momentum. At the same time, speculative interest has surged as traders and retail investors internalize the narrative of silver's structural imbalance and long-term demand growth. This speculative dimension adds a layer of complexity to price dynamics, as optimism about future demand and supply scarcity can become self-fulfilling in the short term, even as fundamental market forces continue to evolve. Some market observers point to technical signals that suggest periods of potential consolidation or volatility, as silver has now entered what many describe as price discovery territory, where historical benchmarks lose their predictive relevance. At these elevated levels, silver's price action becomes increasingly sensitive to shifts in macro sentiment, inventory availability, and even currency fluctuations. Any signs of slowing industrial demand or changes in monetary policy expectations could trigger near-term pullbacks, reinforcing the importance of risk management in an otherwise bullish narrative. Yet, even with these risks acknowledged, the broader trend appears firmly supportive of continued interest in silver across multiple market segments. Looking ahead, the long-term fundamentals for silver remain compelling, albeit shaped by complex and competing forces. The energy transition is far from complete, and as economies worldwide electrify transportation systems and expand renewable energy infrastructure, silver's role will only deepen. EV adoption continues to accelerate, with forecasts calling for significant increases in annual production that translate into sustained demand for silver-intensive components. Meanwhile, the expansion of AI and data center infrastructure promises to embed silver even more deeply into the digital economy, creating new avenues for consumption beyond traditional industrial applications. At the same time, supply remains a structural challenge. With new mining capacity slow to materialize and recycling contributing only a fraction of total demand, the market's ability to bridge the gap between demand and supply is limited. This persistent deficit landscape raises questions about how the market will adjust over time, particularly if demand accelerates even further or if geopolitical and policy shifts continue to constrain supply flows. Some analysts believe that these conditions set the stage for continued price strength into 2026 and beyond, while others caution that markets may experience intermittent corrections as participants recalibrate expectations. In this environment, strategic considerations for investors and industrial buyers have become increasingly nuanced. Physical holdings remain attractive to many as a hedge against volatility and currency risk, but holding physical silver also involves considerations around storage costs, liquidity, and premiums over spot prices. Exchange-traded products offer liquidity and convenience, but they come with their own cost structures and counterparty considerations. Meanwhile, exposure through mining stocks or related equities provides leveraged participation in the silver rally, but introduces company-specific risks that can diverge from silver's pure price performance. As 2025 draws to a close, silver's journey this year serves as a testament to the evolving nature of global commodity markets. A metal once primarily associated with jewelry and modest store value demand has emerged as a strategic industrial input, a hedge against macroeconomic uncertainty, and a center of investment attention. Its performance has challenged traditional market orthodoxies about supply elasticity and highlighted the interconnectedness of technological progress, energy transition imperatives, and investor psychology in shaping commodity price outcomes. In many ways, silver's story is emblematic of broader shifts in the global economy, shifts toward electrification, digitalization, and sustainability that require rare and critical materials in unprecedented quantities. As these structural trends continue to unfold, the silver market's evolution will remain a barometer of how effectively markets balance the competing pressures of supply constraints, industrial demand growth, investor sentiment, and policy developments. For participants in this market, understanding these forces and their interplay will be essential for navigating what promises to be an extraordinary chapter in the history of this timeless and versatile metal.